Are live. All right, good morning, everyone, traders. Day, what is it? Day 18 of my 90-day to first payout challenge. Friday, August 1st, NFP Friday, and the candles have just fallen off my chart in the amount of time I was getting the stream set up. So I guess I need to recalibrate and take a look at what's going on here, because we have news coming up here at 10 a.m. So for new traders out there, NFP week is a tough week. That's what this. And from Wednesday afternoon to Friday after the NFP news delivers at 8:30, right there, you want to be careful in that time period. Now this week it's actually been quite nice, and so I'm actually anticipating the possibility of some garbage today, because a time period that usually is not that nice, Wednesday afternoon, Thursday, was actually quite clean. So let's just calibrate and see what's going on here in the charts. The weekly here is just falling off a cliff. Got tons of delivery to sell side. So I'm anticipating some kind of rebalance. I like these as a target for today, potentially. Equal highs. Tapped into this old new week opening gap. But let's take a look at the daily chart. So here the daily, it tapped into the this 2 to 2.5 standard deviations, which stand for new traders. Standard deviations are a great way to measure things when there's no targets and all-time highs. There's nothing to the left. So as a new trader, you want to get familiar with standard deviations. But on the daily, we're coming down into this consolidation zone, this rejection block, equilibrium here, and then previous all-time high. However, right below that is these equal lows, and I really like those for a target for this morning. So let's see here. We're looking for the daily smart money reversal, and I'm wondering if it was this right here, 8 a.m., 8:30 with London. So all right, tapped into the 4-hour chart. See this gap here in these candles? I think that's a new week opening gap. Tapped back down into that one, this projection block. Curious to see what price does at this level. All this liquidity is below here. So I'm going to wait and see what happens here. I'm curious how this volume imbalance supports level, how this rejection block chooses to support level price or not with these liquidity points below us. I'm kind of wondering if we're going to continue down further this morning. So kind of take a look back at the 1-minute chart here. So we have this nice distribution, 2 distributions. So accumulation, manipulation, and then this distribution. And we kind of accumulated right before 9:30, and then miniature little seek and destroy. Glad I wasn't involved in that. I wasn't quite ready to be at the charts. I wanted to wait to see the 10 a.m. news, so for new traders, the news events really impact what we do. In this case today, the 10 a.m. is ISM manufacturing PMI, which I don't even know what it means, but what I know about it is it's not a it is a high impact news. It's a red folder, but it's not one that tends to drive price ridiculously. And in the case of today, looking at the NFP drop, it was only 300 ticks. I'd be curious to look back at FOMC on Wednesday, that news event, and see how that was in comparison to this, which 300 is okay. Sometimes they can only be like 100, and that's like a total dud. What I'm getting at is I don't believe ISM is be much of a mover. It's relevant, and I'm imagining price is going to consolidate before the news event, which is more than likely what it tends to do. So in terms of levels, what are we looking at? So we have Asia high is not taken. London high is not taken. We have these equal highs up here. $9.30 open. I'm a little slow. It's 750. There's an inversion right there. Tapped into the levels I like. We are 8 minutes before the news. Kind of sizing up. What I don't know is if there's any SMT here. And my indicator is not yet told me there was. So let's pull up YM and ES. Holy moly, there is on these 15-minute charts here. Look how bad I got to zoom out to even see if there's any SMT. So there is SMT on the 1 hour here. Oh man. Ooh, I don't like how it's responding though. Look at that. Look at that down close candle. So that's that's continuation right there. I'm not interested. I can be patient for this 10 a.m. news. It's only 7 minutes away. So let's see. We've got 7 minutes until that news drop. I like the zone we're at here. Got to poke around a little bit. Gonna have to zoom out. So that's the all-time high. Price just retested back into. Kind of pushed through this consolidation. We have these equal lows right down here. Rejection block on this daily candle. What else do we have down here? So here's this little itty bitty volume imbalance right there. Price loves those. Those to me are more important than DPRs, are more important than inversions, are more important than fair value gaps. Fair value gap below. So the question is, you know, when I get into a trade, what's the next 1 hour candle gonna do? That's all you really need to, like, you pull together this whole daily bias, which is helpful. But in the end, when you're a scalper, the question is, what's the next 1 hour candle gonna do? And so in the case here, this 1 hour candle stop hunted and started to distribute. So after this much of a distribution, it's either going to be a sharp recovery or a consolidation. Let's check this out. Back down on the 1 minute. So this stop hunted locally. No SMT though locally. So here is ES and YM. I know for a beginner trader, it might seem a little overwhelming to be looking at 3 charts at once. And that's kind of something that you grow into. And you don't have to sit here and compare them necessarily. We look for SMT, which is just divergences, which is when the charts look different. And in this case here, we have the same distribution happening on all of them. We have this low and this low on all of the same charts, right? And so this is kind of, and you could start off, you don't even need all three of them. If you're trading the NQ, you can start off with just ES and forget YM, Dow. And then as you expand in your trading, you can add in, start looking at all three of them. And then you can also start comparing the movements of them and whether they're in sync or out of sync. But at the very least, the idea is we look for divergences between these assets, which is very similar if you're doing like RSI divergences, same thing, where the RSI is diverging from the candlesticks. Similarly here, I don't have an example in front of me, but I'll find one at some point to show you. So here I have an inversion, which is initially what I was eyeballing just a few minutes ago. However, at the moment, this is not pretty looking to me, so I'm not sure if I want to engage in anything here. We have the 10 a.m. news and dropping in 3 minutes, and I think it's the kind of thing where this is looking a little ugly. So that's not going to help its case to take along there. Oh, excuse me. All right. Looking at these charts, we have swept a ton of sell-side liquidity. Look at that. So blasted through the daily low, took these relative equal lows. Here's this volume imbalance supporting price. This IFVG is no longer relevant. So we have the next 4-hour candle happening. So I'm anticipating for the next 4-hour candle a closure. Some kind of, we're going to form the wick and then take these, I think. 1-hour candle closes in, a minute and 36 seconds. There'll be some kind of fair value gap here more than likely. So I'm just going to mark that out because I'm anticipating you get to a point when you're reading price where you kind of anticipate what's coming. And you can start seeing it ahead of it actually. That only comes from reading candlesticks a whole bunch. It doesn't come from anything else, indicators or anything like that. So we tapped into this. I mean, this is a good spot for some kind of reversal between the new week opening gap, this volume imbalance. I'm not sure. We do have SMT last time I checked. Still, why the indicator's not showing it. Doesn't catch them all, but it catches like 90%. And if you want, this indicator is a paid indicator and it's well worth it. There's a link below, will be, I don't know if there is currently, to this SMT indicator. I like it a lot. It was well worth the money, not having to draw all the SMT divergences. This indicator is useless. We don't really care about Asia and London sessions anymore. Kind of like how I was predicting price was going to consolidate before the 10 a.m. news. It's happening just like that. We have it dropping in 1 second, I believe. Yep, 10 a.m. news. So here we go. We have a local, you just saw that local SMT divergence. That's when these different assets are trading differently at different rates. Let's see what we got, if we got anything here. Got some liquidity forming above, obviously tons of trend line liquidity. So this news event is pushing price down. So far 200 ticks, which is reasonable for a day when NFP already dropped. So currently, the 1-hour candle has no wick. 4-hour candle has no wick. Oh, the 4-hour does. So the 1-hour must. Barely see, like barely there. There's a volume imbalance. So if this is, I'm actually changing. I feel like it's going to push down, take this liquidity, and then drive up. Oh, I'm not even on the wrong chart. So drive down and take these liquidity pools and then push up. But coming back here, here's this fair value gap. So I'm just kind of preparing for the possible scenario of something like this, mapping out just so I know 193 ticks, and then I can sit here and go, okay, one contract is $96 with that big of a stop loss. Now I'm at least have that in my head if something were to happen relatively quickly. I'm not convinced I'm going to be long here, but we'll see here. I know there's like, it's just interesting when the chart starts looking like this. You know, there's nothing around you, nothing to the left. I'm not feeling like I'm gonna pair it along in here. So the daily blasted through this rejection block, blasted through that fair value gap. Coming down in here, pushed into the all-time high, previous all-time high, which is significant. All of these are all all-time highs, but this one, you know, was salient for so much longer. So here are some equal lows. So I want to see it come down further into here. Take some of this liquid right there. Zooming out even further, just kind of getting the view of the week. Thursday high of the week, I guess. So previous week high was taken, previous week's low was taken. Look at this weekly candle here. Curious to see even more weekly candles. So we're in the macro. It took that liquidity. So I'm anticipating this becoming an inversion. Gotta zoom way out. Let's see here. So here is a SMT currently forming. It's unconfirmed on the 15, or on the 1 hour rather. The kind of hard to see with these lines on this indicator. I need to change that so that way it goes away. You can do that by going into the settings, visibility, and sometimes it doesn't save, but I do this. That way, as I go to an hourly chart, they disappear. So there is unconfirmed SMT developing, and it would confirm, but not before I'm interested in taking this trade. So it might be the kind of thing where I got to loosen up that rule a little bit because it's not confirmed. Everything else looks nice. One more liquidity point that I feel like it might have want to take for reversing, but it's kind of looking like it's wanting to do the thing. Not stoked about these two equal lows right here above this fair value gap. All right, we're going in long. Let's see. Let's go. I got this inversion here. I marketed order in. I felt like it was going to be impulsive and just potentially move. I'm going to find out really quickly here if I'm right or if I'm wrong. I think that's likely. Let's go though. The only hesitation I have is that unconfirmed SMT. Other than that, like I like how the 1 hour is responding. I like how the 4 hours responding. I don't like this rebalance here. So right there, I could have, set a limit order back on top of this inversion, creating this trend line liquidity up in here. That SMT was somewhat questionable, just that it hadn't confirmed. I don't really have specific rule for that scenario where it hasn't confirmed. So obviously I may have to consider that later. Looking like it might want to chop here a little bit, but I guess one of the things that I came across this week was from a friend, the idea that when you place your stop loss, you just assume that the money has left your account as a business. So that's the way I'm looking at it now, is I have spent this money and it's gone. If I recoup it, cool, great. So let's see what happens here. So this volume imbalance right there, I don't like how it resisted price. I would have wanted to have seen a candle close above that. Here, I feel like I can run this up. So there's this tailless candle here that I want to use as a target. Kind of far away, but all these imbalances, these equals, equal high, equal low, or equal highs, excuse me, local equal highs. Plenty of high probability targets up there. Let's go on and Q. I like how the 1 hour is looking. There's a tailless candle right there. So this is what I want to see, is I want to see it keep pushing. It could have just wanted that for a stop punt and a continuation lower. And then it will form my model here against me. And if I see my model forming against me, that's generally a sign that I'm wrong. And now that I think about it, maybe I should have a rule where if I see my model forming against me, that's one reason to actually collapse the trade, versus just backing out of it for no reason. So far, nice bullish price action. You can see this these gaps are getting inverted, or this gap's inverted, this volume imbalance is inverted, forming this fair value gap down in here too. I like that. I like seeing this displacement. I'm just gonna, real quick, check out my risk to reward here. Kind of thing. So we have a breaker. Forming. I guess it's actually confirmed because this candle closed above this right there, which I'm assuming that to be the breaker. And so I can measure that with, again, these standard deviations, which you just take a manipulation leg, which to me is this right here. And then you can measure upwards. So I can get one standard deviation is right there, which I'm not even aiming for that. With these standard deviations in a breaker, you can get, yo, Chris Postal. Good morning, Chris Postal. I didn't see you chatted me. I also see a Jacob Sheets. Hey, what's going on, brother? Oh shit, thanks for that quick catch, brother. Boom. I do not want to buy stop up there, man. Thanks for that quick catch, mi amigo. Yeah, I don't want to add there. That's not what I wanted to do. Apparently, hey Jacob, apparently I haven't finished this coffee at all, so apparently I need to. So we got 15-minute consecutive candle bearish SMT forming. Not the end of the world, just something to take note of. I think it's going to be I don't think it's going to confirm. You guys take any trades today? Chris Postal, Jacob Sheets. What do we got? 1.7 hours, my target. So at this point, I'm okay with price coming down into this gap to retest this breaker. I don't believe it should come below this consolidation. I'm going to tuck my stop up into here. I want to see some distribution, which to some extent I might not. I mean, this is either going to be a V-shaped recovery or it's going to consolidate down in here with this much distribution. I mean, look at this chart. What's that? What's that distribution? 13, 14, 15, almost 1,500 ticks since 8:30. Now, the last time I actually placed a buy stop order instead of a sell limit order kind of thing, where I flopped using the orders, was in my last attempt at a payout, and I was scaling up that week, and it was a 250K account. So I was trying to push my risk up to about $600 a trade on that at that time, and I think as opposed to like whatever direction I was long or short, I forget. But instead of a stop order, I used a buy order. And so whatever my risk was, maybe it was $500 on the trade, price is coming against me, taps my buy limit, I'm assuming, or whatever it was, the opposite, doubles my position and keeps going against me. And quicker than I could collapse it in any meaningful way. And it ended up like wrecking me for like $800 or $900 on that trade. And then that kind of started a full-on tilt session, and I think I wiped out like $3,000 in gains in like 2 days because of that exact thing happening. And that was the last time I actually did that, so appreciate you reaching out and saying something, Jacob. Maybe I would have figured it out once I'm up here looking at it, but price could have also just ripped So I'm liking this distribution. A little bit of a consolidation here above this breaker. So here's a breaker, 1-9. I like this movement. Any reason up in here? So these equal highs were taken. That. I want to zoom out a little bit, see what the 5 minutes looking like. I'm going to leave the camera on the main screen while I look over here in case it just runs up to my sell limit. So just tapped into a 5 minute fair value gap right here at this level. So probably going to cause some kind of push down. I don't like this tailless candle right there. Trying to balance a conservative target, but also not just going for 1-to-1 anymore. Yeah, Jacob, traders got to help each other out where we can. I agree, my friend. So I'm curious to see how it acts on this 5 minute fair value gap, see if it's going to act as resistance or if we're going to flip the consequent encroachment. I think there's been enough sell side delivery that this is a totally conservative trade. Right up into here, you know, down close candles supporting down close candles. So here's the last down close swing. So right there, not even one standard deviation of this breaker, tailless candle. There's a lot of movement. I wish I would have had some more room to go on with some more contracts so I could peel some off, leave a runner. But it's Friday, and I'm not expecting perfectly clean price action for a few reasons. But the delivery is actually nice, nicer than I was expecting. I'm also expecting the possibility of chop down. So I want it to be a little conservative in my position, but it's just moving, it's just running. At this point, I'm more than 75% of the way to my target. I can go break even on the trade. I'm risk-free now in this thing. 1.7 R, I'm curious if I want to push that at all. So what we want to see everything on the left flipping. So for example, here's a fair value gap. Noticing that these two candles did not flip this into an inversion yet, but we want to see those kind of things happening. This is the first fair value gap on the left since way down in this breaker. I'd love to see just a push up. And I think this tailless candle, let's check it in that. Yeah. Got me spooked just a little bit. We're getting far enough away from that tailless candle that I think it's going to go. Because it can leave them, just like this one. Right there. So we got a fair value gap here on this side of the curve. I do want to see that hold. It can wick below it. I don't want to see the breaker retested quite yet. And the time is 10:20. So we're in the 10:20 to 10:40 Hydra macro. Not an official macro that is recognized by ICT. I don't know. I just heard Chris Postal tell me not to be greedy. Are you thinking anything over there, my friend? It's not too greedy to go for 1.7 R. All right, 11 seconds till this candle closes. Love to see a closure above this fair value gap, making it an inversion. Not quite. Boom, boom, boom. Oh, you're in this long. Right on, dude. Same TP. You're going for a TP in front of this gap, yeah? Exactly. I'm not wanting it to stall. I'm fine with this distribution. And I don't want to see it come below that gap either. I just want to see it go. So it's not inverting this quite yet. Any reason? Just because I don't want to sit in this trade for very long with this distribution that happened. I want to see this candle close above. Otherwise, I'm not happy. This gap has already been tested right there. I'm not liking this candle unless it gives a quick response, like if it takes the liquidity down in here. In which case, let's look at... yeah, I want to see a quick response or I'm out. Otherwise, I can see my model forming inversely. Yeah, I'm out. Maybe the wrong thing to do, but we'll see. I'm good. See where this candle closes. This could have just been a stop hunt, but closing below this inversion. Nice strong push. I'll give it that. There we go. Look at that. It's going to close above there, and it's going to run for TP. That's cool. You holding, Chris? Cool, cool. So here was, let's put that. Too many folds. Let's see here. Let's see. Or is it going to chop? That. There we go. Some nice response. Look at that. I got spooked out of my own trade. Which is an interesting thing, because it's like I didn't let my trade play out, which meant I didn't get my higher R, which meant I didn't offset more losses. And that was something I picked up in a video from JadeCap that Chris, you shared with me last night. I've been thinking a little bit about, and he said it so subtly, and maybe in a way that so many other traders have said it too. You know, like let your winners run or let your winners win. Is that what he said? Let your winners win. Something to that effect. And it just kind of struck me because it was like, well, right, if you don't get 2R frequently enough, then you're making it more difficult for yourself to offset those losses. And then I guess that like, where does the subjectivity and the trader intuition come in if that's the case, right? Because sometimes you're just like, you know, and I'm not certain about having a totally mechanical system versus a mechanical system that's informed with maybe some intuition and experience. So I don't have the answer for that quite yet, but I think it's an interesting thought. Yeah, Chris, you're saying, I think on a day like today, though these ranges are huge and taking taking the profits and not being greedy is all a balance. Yeah, it's like these are huge ranges we saw today. But the question is, yeah, when are you going to be caught in the consolidation? You know, with this expansion, we can get, you know, how many expansions before we do get that consolidation? And then TP for you, Chris. Look at that. Boom. So would have been nice. Not going to complain. Take the W, he says. All right, you're telling me, you're probably telling me I'm over analyzing it, right? But yeah, so that trade was a winner. It's building this liquidity below. And that's when I do like to be out sooner than later, because this isn't how price moves, right? Like, it doesn't like to move like that. It likes to move like this. That's one way to know that I can stay in a trade. You know, if I'd seen more of that, I would have liked, you know, if price came up into here, created some kind of swing, well, then it would have been more comfortable for me to hold for that. So that's kind of that trader's intuition that, you know, I don't know where the balance is sometimes, because it's like my intuition was telling me, oh man, I'm getting all this liquidity. At any point in time, this effort could just reverse. Like, here's a tailless candle, here's a tailless candle, here's trendline liquidity. For me, I'm super confident it's coming back down in here session. And so it's like, well, is it coming back down when I'm in my trade or after my trade? And I could be wrong. You know, what do I know? Not financial advice, right? And these are all things I'm figuring out and just kind of like, you know, this is my stream of consciousness here. And acts kind of as my sounding board where I can explore these ideas and come up with what I believe. And, you know, taking, like living like chess says, taking other people's systems and making it your own. Like, there are some traders who just intuition-based traders, and they have no model, little for a model in a system, and they just trade the candlesticks, and they almost, like living like chess, can't tell you what he's doing. And then other traders are like Hydra, are just rules based. Like, he won't take a trade if it's 1 minute outside of the macro. And for me, I'm like, you know, the macros are not the be it end all of everything. And if I see a trade set up a minute or two outside of it, yeah, I'll go in. Chris, you're saying today is a win for me. Yeah, I'll take it. I'll take it. And it's been a weird week. Like, this whole not sleeping well thing, man. A while back, I struggled with insomnia, and 2 years ago, and kind of feeling a little like that. Last night, I slept fine enough, so that's why I was going to trade this morning. But yeah, it's like battling these things and the challenges on top of challenges, because trading isn't easy anyways. All right, so 1030. Look at that, just floating up into this fair value gap right there. And so yeah, it's been a challenging week for me. I missed 2 beautiful days because of not sleeping well. And that was disappointing. Both days, like I paper traded. I sat there and I didn't log in, and I just looked at the chart and I'm like, man, I would long that if I'd slept well. And both were W's. And so yeah, and that would have been a sweet, because I got this challenge kind of started off a little rough the first couple weeks, and so it would feel really good to kind of just get a nice solid week underneath me, and that would have happened if I hadn't slept poorly. And so sometimes I feel like the big guy's messing with me, you know, like do you, Chris, you said it, do you really want this? And I'm like, man, I've given up everything for this, you know. The amount of money I have spent to make this happen is ridiculous. I spent more than most people have in their savings, you know. Like, I don't, not most people, that's not quite the right thing to say, but a lot of average people. It's like, I'm rambling at this point, so I'm going to stop talking. A lot of low resistance, liquidity being built. Yeah. And yeah, you're right, Chris. A W for the weekend, 100%. Because I don't know about you, but I've noticed if I go into the weekend with a red Friday or a red week, it's just as much as I try and like I don't care because I'm not sitting here trying to make, you know, pay my bills right this minute. I'm not trying to do that. Even still, it's still hard to take a red week or a red Friday. The other days are much easier for some reason, but when it kind of marinates over the weekend. But yeah, you got a W too, Chris. Yeah, 100%. Well, looking around at the charts here, just quick gander. 15-minute, look at that beautiful response off the new week opening gap coming back into the average daily range. So here's what I'd be eyeballing, this fair value gap right here. And these equal highs up here potentially. It's Friday. Let's think about the TGIF. Have one of those. Here's the weekly high on Thursday. If this were to be the low of the week. Apparently I'm dyslexic today. Putting buy stops for buy limits and inverting my fibs. So I'm just going to pretend I'm dyslexic today. So here's a 20% retracement already. If this were to be the TGIF. But really there's this consolidation zone here for a 30% retracement. All right, so this daily candle took those relative equal lows, tapped into, retested the all-time high right there, the previous all-time high. It's just beautiful how the daily tapped into this standard deviation. That's what I was mentioning for any new traders, any beginner traders, like when there's no price up and to the left, you can use Fibonacci standard deviations, look for the -1, the -2, the -2.5. This is the zone, that's why it's pink on mine, that we want to anticipate a manipulation leg. So manipulation is a stop hunt, pushing up into. And look at that, -2 standard deviation. That's beautiful. It's random. It's 100% random too, in case you didn't know. And it just feels good to be on side. Feels good to be getting back into sync with things. I'm surprised it took me as long as it has. Like this has been a little tough on my ego to feel like what's going on? Why can't I get in sync with price? Last couple. So the 4-hour did the opposite of what I was thinking. I thought it was going to wick up, slam down, and take those and then reverse. And instead it pushed down, formed the wick, tail, excuse me, then pushed up. So my bias was right, my narrative was wrong. But really, I mean, this is relatively clean looking price action. Last 3 days have been surprising. I wasn't quite sure what to expect with, I can't remember the last time a NFP and FOMC were together in 1 week. And I actually didn't even have any notes or protocol for how to approach that week because there's like conflicting information. You know, with non-farm, we trade Wednesday, but you know, FOMC was on Wednesday afternoon. So do we trade Wednesday morning? Like, or do we not trade FOMC Wednesday afternoon because NFP is coming up kind of questions? Ultimately, we let the candles be our guide. That's the telltale sign. So you know, for any beginner traders who are learning ICT, for example, and it seems like every day is a no trade day, right? Every day is a no trade day. Like, oh, the wind is blowing south, don't trade. That's part of my frustration with some of this ICT stuff. Like, I love the rules because it's just helpful to be like, I don't do this, I do that. I don't have to think. But it's also not always totally accurate. And so, like, when we get consolidations, that's how we tell we don't do it. But I think that's sweet. I think I'll take a W for the day. Price is looking really nice. Oh, interesting. Look at that. I don't understand why the charts do this sometimes. That candlestick was not a volume imbalance. And then it was. Because we can look over here on MN. So same symbol, MNQ. Right? On the 5-minute, and we see this. Oh, I'm not even on the right screen. Here's this volume imbalance. Look at that. And then over here on the 5-minute, it didn't record like that. Super interesting. All right, well, sweet. That's my W. I'm not going to push it today. I'm going to stop today in green. I'm going to stop this week in green. And I'm going to take the W's as they are. So cool. Partial W for me today. I hope you all got your piece, or if you didn't get your piece, you got a good lesson. Remember, if we, when we take a loss, we don't want to overthink it, but there's patterns in the losses, right? We don't want to look at one loss and analyze the crap out of it. But when we get a pile of 10 losses and they're all similar, that's what we want to see. There's a lesson in the loss in that case. But I'm going to sign off. I think that's enough for me today. You all have a wonderful day, and I guess I just appreciate, so it shows me there's 3 people here on the stream, and if you're taking the time to sit there and watch this and listen to me, that means a lot. I'm not anybody. I'm just some guy sitting here trying to do my thing and journal it, publicly and hold myself accountable. And it means something to me. So I appreciate you all stopping in. I hope you all have a great weekend.